Okay, are we good to start? So we'll first do some basic theory just to build some intuitive understanding. So what is a mutual fund? Yes. So typically the word used in investment world for an investment vehicle like this, it's called as a pooled investment vehicle. Again, the whole idea behind this is that there would be a lot of investors who would collectively come invest their money into this particular fund. Now there would be a fund manager here who would in turn take this cash or take this money and invest into different securities. So as the value of these securities appreciate, that means value of this pool of asset appreciates, automatically the value of investment of these investors appreciates. So when these investors originally pay money to the mutual fund, what they get in return is called as a unit. Okay, they get units of mutual fund, and these units you can think of them as shares. So as the value of these assets will increase, automatically value of these units in the market will increase. Now, number one, that why an investor should consider investing into mutual fund. What are the benefits? Diversification, yes. That we've studied in portfolio management, if you invest into only one security, the risk is higher. But if you diversify risk, the risk relatively reduces for given level of return. So yes, diversification is one. What else? Yes, the most important benefit that we get with mutual fund is the professional management of your funds. Okay, so not everyone will have the expertise to invest into equity markets and identify which stocks to invest. So that way it gives you that extra benefit. And second, of course, third also it gives you is that it gives you relatively higher liquidity. Okay, so we will discuss more about this point, and it depends on what type of mutual fund you are going to invest, but there would be some higher amount of liquidity. Now, there are different structures of mutual fund. Okay, so there is a fund which is called open-ended fund. Then there would be a closed-ended fund. Okay, and of course the third segment, which is again a pooled investment vehicle, is ETF. ETFs would be exchange traded fund. Okay, and then yes, what we can expect in India to come in next 1 or 2 financial years, the first vehicle would be called as REIT, REIT, and the second investment vehicle is called REMF, REMF. Let's start our discussion with open-end fund. I think you must be feeling sick. Yes. So what would be open-ended fund? Have we discussed about this in the past?
But you can buy and sell at any point of time. There is no restriction.
So closed-end you can't?
In closed end, there is specified time. Means within that, there is specified date. For that period, you will have to hold this. And after that, you can buy and sell.
Correct. Okay. ठीक है. So I understand this. Are you done writing the first 3 points? Okay. Okay, so understand structure carefully. Open-end fund now. Let's assume that this is a fund here. Okay, this is a AMC. What would be AMC? Asset Management Company. They have decided to create a fund. They are calling this as open-end. So initially they will give you a subscription period of, let's say, 30 days. Okay, that they will do their advertisement marketing, and then there would be a subscription period of 30 days. In this period, investors would come and invest into this fund. Okay, so whatever amount they like, and typically the units are being sold at a price of 10 rupees in India. Okay, so we call this as NAV, the price per unit net asset value. So henceforth I'm going to call this as NAV. Now collectively let's assume that this fund management company collected 50 crores from all the investors cumulative. Now what it will do with this 50 crores, it will go and invest that 50 crores into markets, into different assets. So let's say it purchased HUL, Infosys, whatever was the stocks which was fitting into the criteria, those stocks were purchased. Let's assume that value of these investments collectively in the market increased, and now these are worth 60 crores. That means this 50 crore investment is worth 60 crores. So that's the appreciation of what percent? 20%. From 50 it became 16. Automatically this NAV in the market will become 12. Now after some time, this one particular investor feels that I want to sell my security. Okay, so now if you want to sell your security in an open-end structure, then you have to go and approach the fund manager. Okay, so approaching means you don't have to go to mutual fund company. You send them your mutual fund units and then put something called as a redemption request. Okay, so they would put a redemption request, and once yes, were you sprinting to the class today? Were you sprinting to the class? Oh, you parked very far, yeah. We okay with this? So now there is a redemption request. And with redemption request, so let's say that he had about funds worth 1 crore originally. Okay, for simplicity, let's assume that this investor had invested 1 crore. Which means when he put that redemption request, the value of the investment was 1.2 crores. It had appreciated by 12%. Ideally, what fund manager is expected to do is that from this security pool of 60 crores, he is expected to sell 1.2 crore worth of security exactly in the same proportion in which he's got them as of now. Did you follow what I'm saying? See, let's assume that he's invested about 50% in HUL, about let's say 20% in Infosys and 30% in TCS. For the sake of simplicity, let's say only 3. So now this investor has put a redemption request that he wants 1.2 crore back. Now what you want to do is that you want to give him 1.2 crores but keep the NAV of other players, other investors exactly at 12. So how can that be achieved? That whatever is your portfolio, sell 60 lakh worth of shares from HUL, sell 24 lakh shares of Infosys, 24 lakh rupee worth of shares, and then sell 36 lakh rupee worth of shares of TCS. So exactly in the same proportion in your current holding, sell off the stock, take that 1.2 crores, give it to the investor. Follow the logic? Let's say there is some investor here who wants to buy. Okay, so he wants to buy 2 crore worth mutual funds. Okay, so he again will go and approach the fund manager. What fund manager will do is it will take 2 crores from him. Out of that 1 crore it will invest in HUL. Then about 40 lakhs it will invest in Infosys. 60 lakhs it will invest in TCS. Done. Did you follow the sequence? So if a new investor wants to buy, he will go and approach the mutual fund company directly. Fund manager will take that money, give him the units, buy the same proportion of assets that he's got as of now. When someone wants to sell the units, he will again go and put a redemption request. Then what fund manager will do is sell exactly the same proportion and give him back the money. This structure is called open end. Are you following this? Now what happens in the open end structure? So you can write down. You will say that seller will send redemption request to mutual fund company. Seller will sell redemption request to the mutual fund company. Number 2 point in this, that buyers will send buy request again to the mutual fund company. And the last point is most important. Fund manager cannot time the market. Oh, I'm so sorry, I didn't realize it's not visible there. I'll read out the first point. Seller will send redemption request to mutual fund company. Second point, buyers will send buy request to mutual fund company. Okay, so every transaction is happening through mutual fund company here. And then third point is fund manager cannot time the market, which is an important point. Fund manager cannot time the market. See why he can not time the market. हो गया आपका लिख के? Think of now the problem with this gentleman here. He's got some asset cash. What is the meaning of timing the market? See, there are two ways in which you can make money in the market. One is that you can select a good security, remain invested and let it grow. Or second, that you don't worry about security too much, just enter the market at the right time, exit the market from the right time. We call that as timing the market. So here the disadvantage this fund manager has got is, when an investor came and gave me the redemption request, I was forced to sell. Investor came and gave me redemption request, I was forced to sell. When investor came in and he said I want to buy, whatever money he gave I was forced to buy. So I never had the opportunity to actually buy when I felt that it was the right time to buy in the market. I had to buy when investor decided that I should be buying. Are we clear with this? And therefore, to measure his performance, to measure the performance of this fund manager, the appropriate rate of return that we use is called a time weighted rate of return. Okay, so fourth point that you would write is that appropriate rate of return for this fund manager is time weighted rate of return. Okay, so next heading that you can give, that heading would be time weighted rate of return. So now understand this structure carefully here. Can I delete the screen now? I'll try to be on the left side. Time weighted rate of return. Okay, so what is happening here is that let's assume this is a fund manager. Okay, for the sake of simplicity, intentionally I'm taking 4 years. 1, 2, 3 and 4. Now what this fund manager did was, originally he purchased a stock which was 100 rupee and he purchased 10 units of this stock here. Then the stock became 150 rupees. He purchased 20 units of stock here. Stock became 200 rupees. He again purchased, let us say, 50 units of stock here. So this is price on this side, this is quantity. Then stock became 250 and he purchased 100 units of stock here. And by the end of the year, the stock had again reached to a price of 150, and then he sold all the stocks here. Okay. Now looking at this, what do you think? The fund manager has made profit or he's made losses? Think of this. He's purchased a very high quantity when the stock was 250 and 200, and then he sold them at 150. So, which means on a gross level he's made losses. Okay. Now, why he's made losses? Because he was required to purchase when the price was high. But then, if he's an open-end fund manager, did he have a control over this quantity? No, because that was the time when investor actually sent him a redemption request and then he was forced to buy. So we should not give him undue disadvantage of being required to buy a higher quantity at higher price. So the only return that should be allocated to this fund manager is for the fact that he selected a superior security. Okay, which means that when you want to calculate the time weighted rate of return, you're simply going to ignore this irrelevant. Why? Because it was never under his control. The only thing that he could have chosen smartly was this stock. And the stock that he chose, from 100 rupees it became how much? 150. So which means he's earned approximately 50% return over the period of 4 years. Which means per annum, approximately, ignoring compounding, he's earned a return of 12.5%. This is called time weighted rate of return. Have you followed the logic? Should I repeat this again? Let's calculate how much money went in here. Okay, so 100 into 10, amount of cash outflow was 1000. 150 into 20, cash outflow was 3000. Cash outflow here is 10,000. Cash outflow here is 25,000. Then all the stocks come in, so 120, 180, 280. 280 into 150, how much? 42,000. So 42,000 worth of money came in. Okay, let's take a total here. 25 plus 10, 35 plus 3, 38, 39. So he's made a marginal profit here. That have I done calculations right for this? 150, 170, 180. 150 into 180 it should have been. 150 into 180, not, see, this is 100, 150, 170, 180. Now this is correct. So the money that he received is 27,000. That means on a gross level, total amount that is invested is 4, 14, 29, 39, and total amount that is received is 27,000, and then there is a loss of approximately 12,000. Okay, but we cannot blame him for this loss because he had no control on this amount whatsoever. So only thing that a fund manager could have chosen here rightly, that he had a control over selection of the security. And what did he do? He selected a security which at time 0 was 100 rupee. At time 4 it became how much? 150. So which means over the period of 4 years he earned approximately 50% return. So approximately 50% return for 4 years, and therefore for 1 year he earned approximately 12% return. Okay, so first you write down the example. Okay, then write down approximation method for time weighted rate of return, which is 12%, and then we will do the exact method. So below that, after you've drawn this timeline, you can say fund manager does not have, let everyone finish, you can make your timelines first. Finish your timelines. Are you done writing this? हो गया सबका? हाँ, उसके नीचे लिखो क्या लाइन शुरू किया था हमने? फंड मैनेजर डज नॉट हैव control over the quantity of security that is purchased at any point of time. Fund manager does not have a control over quantity of security that is purchased at any point of time. Therefore, while calculating returns, he should not be punished. For having purchased larger quantities at higher prices. He should not be punished for having purchased larger quantity at higher prices. The only control fund manager had was over selection of security. And therefore return should be calculated only to capture superior asset selection. Okay. So उसके नीचे लिखो time weighted rate of return approximation method. Time weighted rate of return approximation method. Okay. So just we can always make this formula, but to build an intuitive understanding on this, you can say 100 rupees stock has become 150 in 4 years. So that's a rate of return of 50% over the period of 4 years, and therefore per annum rate of return would be 12.5%. Okay, so just write down this part. I'm rewriting it here again. 100 has become 150 over the period of 4 years. That's a rate of return of 50% over the period of 4 years, which means per annum it's 12.5%. But when you calculated this 12.5 in approximation method, what you've ignored is the time value of money. So below that write down time weighted rate of return exact method. You can say TWRR exact method. Okay, so the exact method is that you have to calculate geometric mean. And there are multiple ways, so I'm going to derive multiple formulas for you. First is geometric mean. How geometric mean is calculated? In this case, fourth root of 1 plus R1 into 1 plus R2 into 1 plus R3 into 1 plus R4. हर एक पीरियड का होल्डिंग पीरियड रिटर्न निकालो. एक साल से पहले साल में कितना, फिर दूसरे साल में कितना, फिर तीसरे साल में कितना. So if you would calculate that, fourth, this would be 1 plus 50%. So यहाँ पे you can write down how R1 is derived. R1 is derived as 150 by 100 minus 1. Okay, so this is 1 plus 50% into 1 plus. This is 150 has become 200. Can you find out how much does this become? May I use your calculator? So this is 200 by 150, which would be 1.33. That means that's a rate of return of 33.33% into 1 plus. Next time it becomes 250 from 200. So R3 should be 250 by 200 here. This is 25%. So 1 plus 25% into 1. And in this case it's going to be a negative return. So minus 250 became 150. So that's a loss of 40%. So minus 1 plus 40%. R4 is being calculated as 150 by 250 minus 1. आ रहा ना समझ में? Okay, so let's calculate this together. Under root 4 into 1.5 into 1.3333 into 1.25 into 0.6. So 1.5 into 1.33 into 1.25 into 0.6, which would give us 1.50. This would give us 4th root 1.50, and which is equal to 1.5, and you have to take under root twice, which would give us is equal to 1.1066, which is equal to 10.66%. $1.1066, which is equal to 10.66%. Have you followed the logic? Now there is always a shortcut to do this. You don't have to do such a big story, because if you'd see, ultimately 1 had become 1.5 here. Following this? So you could have, think of this, look at this formula carefully. What did I do? To find out R1, I said 150 by 100 minus 1. So this is 1.5 minus 1, which gave me 50%, 0.5. Correct? Then I added that to 1 again. 1 plus R. मतलब ये अगर मैं ये माइनस नहीं करूं, if I don't do this, what is this? This is simply 1.5, right? So if you would now see the formula carefully, under root 4, this is 150 by 100 into 200 by 150 into, you don't have to do this, just see this carefully, 250 by 200 into 150 by 250. Now this will cancel out, and eventually it would be nothing but 4th root of 5 by 100. Okay, and that is again the same number, 1.5. The only reason why we need to learn this method of geometric mean, because if there are some interim cash flows, then this shortcut method doesn't work. Interim cash flows means, what if you receive some extra dividend at time 1, extra dividend at time 2? Then for every time you'll have to calculate this R and then calculate a geometric mean. But if there are no cash flows, and if 100 rupee asset has become 150 in 4 years, you can use the shortcut method directly. Are we clear? Should we move on to next point now? Okay. So next point, write down, is money weighted rate of return. No, sorry, did you write money weighted? I'm so sorry. First we have to understand a closed-ended fund. Closed-ended mutual fund, or a closed-end mutual fund. Closed-end mutual fund. So this is now a mutual fund here in the center. Now these are the So again, a mutual fund will give you a subscription period of 30 days. These are all the investors who would come and buy those units at the price of 10. Mutual fund has collected a cash of 50 crores. This 50 crores they invested into different assets. So let's say HUL, Infosys and TCS in the ratio of same 50%, 20%, 30%. Now the value of these assets have become 60 crores. So this is worth 60 crores. The units are worth now 12 rupees. This investor wants to sell his units, so he goes to the fund manager. Fund manager says, don't come to me, go to the exchange. So go to National Stock Exchange or Bombay Stock Exchange. This is the place where these units are listed. Okay. So he can put a request here saying that he intends to sell his whatever units he possesses. There is some other buyer who also wants to purchase. They cannot go to mutual fund company. They will again go to this NSE. Then he will say that okay, NAV is 12. I want to sell at 12. If this person feels okay that I want to buy at 12, then the transaction will happen and then they would buy and sell securities. Which means that for a lock-in period, so typically let's say if the lock-in period is 5 years, for 5 years a fund manager can do whatever. Of course, I'm exaggerating, he cannot do whatever he wants, but he can invest the way he likes as per the mandate given by the mutual fund. So he gets a tremendous right now here to time the market in case of closed-ended mutual fund, and also to select a good quality security, because an investor is not disturbing him by either requesting him to buy or requesting him to sell. The entire now channel is being routed through an exchange where the same number of units are being bought and sold by the investors. This is called as a closed-end structure. Are we clear with the concept? Should I repeat any part? No.
Subscription period 30 days means after 30 days.
हाँ, so typically 30 days होता है. So उस 30 days में जिसको खरीदना है वो खरीद सकता है. एक बार खरीद के हो गया, then fund lock. फिर कोई और म्यूचुअल फंड के पास नहीं जा सकता. फिर आपको खरीदना है तो एक्सचेंज से खरीदो. Are we clear with this? So you can, if you want, you can make this. I don't know if it would make any sense after a few months.
फर्स्ट टाइम इशू होगा तो एक्सचेंज से कैसे करेगा?
हम्म
फर्स्ट टाइम इशू
नहीं, फर्स्ट टाइम एक्सचेंज से नहीं खरीदना है आपको. फर्स्ट टाइम इन्वेस्टर्स ने इनको पैसे दिए, फिर खरीदा. एक बार वो लॉक इन पीरियड क्लोज हो गया, उसके बाद फिर आप नहीं खरीद सकते और बेच सकते हो. फर्स्ट टाइम तो आपको म्यूचुअल फंड से खरीदना पड़ेगा. सो 3 important points with this. Number 1, that buy and sell requests are not sell to mutual fund company. Buy and sell requests are now not sent to MF company. Instead, units are listed on an exchange. Units are listed on exchange. Number 3, that investors can buy and sell units on exchange. Investors can buy and sell units on exchange. So now next 2 points are important. Unit may trade at a value higher or lower. Unit may trade at a value higher or lower than NAV. Point number 4. Unit may trade at a value higher or lower than the NAV. Okay, what is the intuition behind this? That like equity shares, yes, but see what happens is that there might be some fluctuations in the market where the demand suddenly turns out to be higher, and NAV is reported when? NAV is reported at the end of the day. So during the day when these units are trading, they might end up trading at a price which is higher or lower depending on how the market is behaving. Okay, so not necessarily they will always trade at exact NAV. 5th point, that fund manager gets to time the market. Fund manager can time the market, and therefore appropriate rate of return appropriate rate of return is nothing but a simple IRR. Appropriate rate of return is nothing but IRR. IRR is internal rate of return. Okay, so in fact we will try to save some time here. So when we deal with that concept of IRR in financing decisions and investment decisions, that time we will do one example on closed end. एसेट मैनेजमेंट कंपनी का क्या
पिक्चर में कब आता है एसेट मैनेजमेंट
इस स्ट्रक्चर में? अब ये एनएवी कैसे डिसाइड होगा? अगर ये एसेट मैनेजमेंट कंपनी खराब काम कर रहा है, 50 की जगह पे 40 हो गया, तो यहाँ पे भी एनएवी 8 रुपये के आसपास ट्रेड करेगा. एग्जैक्ट 8 नहीं करेगा, बट 8 के आसपास ट्रेड करेगा. अगर ये 40 की जगह पे 30 हो गया, एनएवी विल ट्रेड एट अराउंड 6. So if the company does good, fund manager makes more money and the value of fund increases, automatically the trading price of that unit will increase, and vice versa.
Two persons are handling this asset management company and fund managers.
No, AMC and fund manager is the same concept. Are you distinguishing AMC from fund manager? See, fund manager is an employee of AMC. So
mutual fund is different, AMC is different.
Oh, you are asking structure of a mutual fund. Yeah, mutual fund business happens through AMC. So we'll do that structural part. There are different structures, there are different trustees, different legislative bodies. But at this stage, see, that is a legal structure. But from a logical perspective, they are all the same. And the value of asset is increasing as the value of this fund will increase.
So investor comes in contact with only AMC, fund manager.
No, investor will come in contact with AMC. Asset management company.
Let's say my locking period is 5 years, but the investor will buy or sell through exchange. So won't it affect my fund value, the mutual fund?
See, you have received your amount, 50 crores. For next 5 years, no one is going to take this away from you, except the markets. So you invest this. If the value increases, good. If the value decreases, bad for you. Then in turn, what you had issued is 1 lakh units or whatever. So in this case, 5 crore units. So these 5 crore units are with these sets of investors. They will go and sell that on exchange, and it would be bought by these sets of investors. So you are completely isolated from what's happening here as far as money is concerned. But of course, the price at which they will buy and sell, that price would be determined based on how well you behave, how well you perform. So if your fund value increases from 50, it becomes 60, these people will start buying and selling close to 12, or vice versa. Yes or no? Are we good to move? Okay. So this is theory. Now the theory and questions, you would find some gap, because the questions, most of the questions which are tested on this are more of mathematical approach. Okay, so let's start with question number 1. It's relatively a heavier one. Just one theoretical concept you need to approach this is dividend reinvestment. See, what happens is a mutual fund company gives choice, okay, whether you want to reinvest your dividend or whether you want it in cash. So as the value appreciates, either it might pay off some amount to investor in cash, and those investors who feel that I don't want it in cash, for them it will again buy back the units and issue them more units and reinvest those funds. Now let's read this question. It's one of those questions which appears to be very simple when you read for the first time, and then second time it scares you. Mr. X on 1/7/2000 during the initial offer of some mutual fund invested in rupees 10 invested in rupees invested ये rupees नहीं होना चाहिए invested in 10,000 units having face value of rupees 10 each, rupees 10 for each unit. On 31/3/2001, the dividend operated by a mutual fund was 10%, and Mr. X found that his annualized yield was 153.33%. On 31/12/2002, 20% dividend was given. On 31/3/2003, Mr. X redeemed all his balance of 11296.11 units when his annualized yield was 73.52%. What are the NAVs on 31/3/2001, 2002 and 2003? Okay, so before we jump this question requires us to do some reverse calculations. Okay, so first we will do some other example, understand regular calculations for this. Let me get a spreadsheet. Okay. See how does it work. Okay. That, let's say this is my number of units at the beginning. So originally if I purchased 10,000 units. Okay. Now let's assume that this is the NAV at the beginning. So it was 10. Then NAV at the end, the closing NAV, let's say it became 12. So my capital appreciation is now 20,000. Now let's say that dividend rate has been given as 20%. Okay. So this amount of dividend that you receive is always on face value. Okay, or the unit price at which it was issued. So which means it would be 10,000 into 10 into 20%. This is the amount of dividend that we've received. Let's say that new NAV purchased from this. Okay, so new NAVs purchased. So typically what happens is that investor would give instruction that when you give me dividend, with that dividend purchase new NAVs for me, new units. So how many units he will purchase? 20,000 divided by 12. So 1667 units. And then closing number of units that we will have is equal to 10,000 plus 1667, and that's how we get closing units. Okay, and that's how the structure moves. Now what is my total wealth by the end of the year? My total wealth here is 11667 into 12. So 1,40,000. Now if you'd see the intuition here, that what this does the question say? On 1/7/2000, so which is, that's the beginning of July, he purchased 1 lakh rupee worth of shares. On 31/3/2000, so 6 months in this year and 3 months in next year, so about in 9 months, he got a dividend of 10%. So which means 10,000 into 10, 1 lakh into 10%, he must have got dividend of 10,000, correct? And what he found is his annualized yield has become 153.33%. So that he's given you an annualized yield. So first step for us is to unannualize it, that how much is his actual yield. Then once we have his actual yield, whatever that would be lesser than 150, let's assume so let's assume about 120. Then out of 120, to have a yield of 120, what should have been his total wealth? Out of that, dividend is how much? Okay, so then what should be the capital appreciation? For what number of units? So then how many, what is the NAV of that unit? That's how we will get it for year 1. Did you follow the logic? So let's do the first one. In fact, let's solve the entire question together. So here I'm writing calculation of NAV as on 31/3/2001. This is first part of this question. Okay, so let's write down certain basic particulars here. You will say opening number of units that we had is 10,000. Then face value or issue price. In fact, we should say issue price is 10. Dividend declared is given as 10%. Amount of dividend would be this amount into this amount into this amount, which is 10,000. The next point, period of investment. Let me be sure about this. 17. So yes, period of investment 9 months. Annualized yield. Annualized yield for the first year has been given as 153.33%. Okay, so yield for 9 months. Yield for 9 months would be 153 into 12 divided by 9.
9 divided by 12.
Did we not do it that way? Yes. So this is 115%. So total value of investment, to earn yield of 115%. In fact, it's not 115. Let's have in exact decimals. 99. So total yield to earn this return. So this should be opening value of investment, which is 1 lakh. So you can say 1 lakh into 1 plus this yield is this much. $214,997. So if you want to earn 114%, the total value of return should be 214,997. Then value of mutual fund units. Value of mutual fund units at the year end should be this value minus 10,000. And now net asset value at the end of the year, or simply as on 31/3/2004. Net asset value as on 31/3/2004. So that would be this value divided by 10,000, 20.4997. Number of new units purchased, 10,000 divided by this, units at the end of the year is equal to How did we get that? 10,000 divided by closing NAV. Amount of dividend divided by closing NAV. You write down, I'll explain you the whole thing again. Just finish writing first. Are you done writing this? Let's try to understand now. See, original number of units we had 10,000, issue price 10. So dividend was 10%, which was 10,000 rupees. Then what was given in the question, that annualized yield is 153%, which is for, but whereas he's invested only for 9 months, that means 9 months he must have earned 114 and he must have then annualized it, correct? So to earn 114, his 1 lakh rupee worth of investment should become 2,14,000. That's only when he will earn 114%. है ना? सही है ना? So अगर टोटल आपका रिटर्न 2,14,997 होना चाहिए, आपको एनीवेज 10,000 का डिविडेंड मिला है, मतलब 1 लाख के यूनिट्स आपके होने चाहिए 2,04,997. मतलब आई हैव जस्ट रिड्यूस 10,000 फ्रॉम दिस amount, dividend amount of dividend. See, it's like this. If I tell you that I have 100 rupees, I have earned a return of 50%. Okay, so which means by the end of the year my value should be how much? 150. But if I also tell you that I have received dividend of 10 rupees, that means this should not be 150, this should be 140. So that's the same logic we're using here. To earn a return of 114, 1 lakh rupees should become 2,14,997. But we've received dividend of 10, so the value of unit should be 2,04,997. And for 10,000 units, that's per unit price of 20.49975, which means number of units purchased, which is assuming that amount of dividend is being reinvested, is 10,000 divided by this, so 487, and closing value is this much. Now why did I assume that dividend is being reinvested? If you read this question carefully, see क्या कहता है, आपने 10,000 यूनिट से शुरुआत किया, but X redeemed all his balance of 11,296 units. So which means he was reinvesting, though they haven't given it, since the numbers are different, that means it's a reinvestment plan. Yes, any questions for the first year? Yes, no. Okay. Now see the second year on 31/3/2003. So write down, give the heading. Say calculation of NAV on 31/3/2003. Now see, this is even more trickier. If you get the trick, it's easy to calculate, but you should be able to think on that platform. Now in 31/3/2003, the only information is given us is, this is 2002 now, not 3, sorry. The only information that has been given to us is 20% dividend was given. How do you find out what?
2012, 2002.
Also in the first case, the dividend
Yeah, it's 12. It's 12. No, it doesn't make difference in this case. ठीक है, 12. See, around 12, since there is no yield given, we don't have to worry so much about it. But it says 20% dividend is given. Now, from this 20% dividend, how do you figure out what was the NAV per unit? समझ रहा है क्वेश्चन? नहीं, क्वेश्चन समझ रहा है नहीं समझ रहा है? See here, forget solution. First year is okay up to this. So this part is okay for us now. Now here on 31/12/2002, 20% dividend has been given. This is the only information we have, and we want to find out NAV. Now it's a bit difficult to apply, but think of it this way, that whatever was the X amount of dividend that was given to me, I can find out the dividend, which is 20,000. Dividend has to be 20,000 now, not 20,000 in fact. Whatever number of shares you have now into 20% at face value, that's my dividend. Now that dividend I must have reinvested, and I must have taken more units, correct? And my units must become 11296 now, because those are the number of units I'm selling at the end of year 3. समझ में आ रहा है ना? So आपका units कितने से बढ़ा, we can find out increase in the NAV, we can find out the amount of dividend. Amount of dividend divided by number of units will give us what was the NAV at that stage. So let's do this together. So we will say total amount of dividend received. So number of units at the end into 10 into 20%. It would be 20975. Then number of units sold as on 31/3/2003. This is given to us in the question. So next year we've sold 11296. 11296.11 units. Number of units as on 31/3/2001. These number of units we calculated here to be 10487. Increase in number of units. Increase in number of units is this amount, and therefore NAV as on 31/12/2002 would be amount of dividend dividend divided by increase in units. So 25.95. Is the logic clear? Should I repeat any part here?
So this number of units sold, are they sold on 31st December 2002 or 31st
31/3/2003. But see, it doesn't matter, because this date in a way was irrelevant, because there is no yield given per se, it's only dividend given, and whenever the dividends are paid, at the same time their investment happens. So which means, see, next year when you're selling your mutual fund, even if let's say the company declares dividend, you won't take units, because you anyways want to sell mutual fund. So which means if you're being able to sell 11296 units, that means last dividend when it was paid, your units increased, and they increased by how much? From 10487 they became 11296. So because of last dividend you got 808 extra units. Last dividend in amount should have been this much, 20975, which means per unit now that time was 25. Are we good to move?
So now just can I have a look at the dividend calculation or the
This one, number of units that we have into 10 into 20%, into 20%. Okay, so last part of the question now. Calculation of now. Now the date is 31/3/2003. See now, what information do we have for the last part? X redeemed all his balance when his annualized yield was 73.52%. That's it. His annualized yield was 73.52%. Now, annualized yield means that yield that he's earned over the period of total period of investment being annualized. So what was his period of investment? From 1/7/2000 to 31/3/2003. So 6 and 3, 9 months, and 24 plus 9, total period of investment was 33 months. Followed? So 33 months में whatever return is earned, if you annualize that, that would be 73.52. So how much he should have earned? Okay, so just write down here, period of investment is 33 months. Annualized yield has been given as 73.52%. So which means total value of investments at the as on 31/3/2003 should be how much? So is equal to 1 lakh. So first, in fact, let me write down the formula here for you. 1 lakh plus, this is my original, plus 1 lakh again into 73.52%. This is my return per year into 33 months divided by 12. This should be the value of total investment. मतलब करीबन 73,000 is what you are earning every year, and you should earn that for 33 months. So approximately how many years? Less than 3 years. So which would be now 1 lakh here plus 1 lakh into 73.52% into 33 by 12. 302180. Number of units as on 31/3/2003. These are anyways known to us, 11296. Therefore NAV for NAV as on 31/3/2003, this value divided by this value, 26.75. Please ask questions. Anything not clear? लिख लो. Once you're ready, you can ask me.
अभी जो नया कैलकुलेट किया है उसमें ओवर द पीरियड ऑफ 3 इयर्स जो कुछ भी डिविडेंड है
देखो डिविडेंड हम घर पे लेके गए क्या? नहीं. What we did, we reinvested. So reinvestment के बाद टोटल वैल्यू ऑफ इन्वेस्टमेंट जो है वहाँ पे हमने यूनिट्स लेते वक्त 11,000 यूनिट्स लिए, 11,296, 10,000 नहीं लिए. मतलब वी कैप्चर्ड दैट इफेक्ट ऑफ डिविडेंड हियर कि 10,000 के यूनिट्स मेरे 11,000 हो गए और मेरा टोटल वैल्यू ऑफ इन्वेस्टमेंट इतना होना चाहिए. सो वैल्यू ऑफ इन्वेस्टमेंट डिवाइडेड बाय यूनिट्स. So the question is really small.
73.52% dividend for being
Nee, see, this is an annualized yield. So had he taken dividend at home, then this would have also been included there. और उसने dividend घर पे नहीं लेके गया. First year he received dividend of 10,000. So he took that 10,000 and bought some more units. Then he received some 20,000 rupees dividend. He bought more units. So at the end of the year, उसके पास units हो गए 11,000. Now to earn a return of 73%, उसका total investment का value होना चाहिए 3,02,180 और इतने units है, so per unit value निकल गया. Yeah, had the dividend been taken home, then we would have reduced that amount of dividend here. We didn't invest 1 lakh in second year. First year we invested 1 lakh. Second year we only invested those additional units. Whatever dividend we received, 20975, with that amount we purchased additional units, and then our units became 11296.
Then what is this 1 lakh second? 1 lakh plus 1 lakh into 73.5.
No, this is written. 1 lakh is what we've invested originally. This second 1 lakh is to find out return. That on your investment you've earned 73.52%. See, you do it the other way around now. If I ask you this way, that over the period of 3 years your 1 lakh rupee has become 3 lakh 2,180. How much is the annualized return that you've earned? So what you would say is that you've earned about that 2 lakh rupee worth of return, isn't it, the difference? And then you would annualize that, so that yield would come out to be 73.52%. Jaise, if I tell you that you've earned a return of 10%, okay, on your investment of 1 lakh, how will you calculate that? You will say 1 lakh plus 1 lakh again into 10%. So we've done the same thing here.
So they have said the annualized return of 73.52.
Yes.
So isn't that mean that return per year is 73.52?
Yes, it means return per year is 73.52. That's why we've said, see, had this been 3 years, we would have said into 3.
Okay.
Per year 3. But it's only for 33 months. So we've actually calculated how many years are those. So he's invested for approximately 2.75 years. So that's what we've done here. Yes, any other question? Though it's tricky, especially the second year. So if you hadn't solved this question and if you would have seen directly this on the exam, imagining this was a bit difficult. The second part. Are we good to move? Next question. Okay. So let me remove the colors here. Let's not do 2 as of now. Mutual fund and equity return indifference. Let's do question number 3. Mr. A can earn a return of 16% by investing in equity shares on his own. Now he is considering a recently announced equity-based mutual fund scheme in which initial expenses are 5.5%. What is his initial expenses? Loading charges. And which kind of load is this? Entry load. There are 2 loads, entry and exit. Entry means when you buy a mutual fund, if you give 100 rupees, they take out 2 for themselves, invest only 98. If you sell a mutual fund, value was 100, they might again take out 2 and give you only 98. So that's called entry load and exit load. Which load is not there in India anymore now? The entry load. So we don't have entry loads now, but of course we have exit loads depending on how quickly you exit. So if you sell very quickly, if you buy a mutual fund and you sell very quickly, exit load would be higher. But if you remain invested for a longer period, then exit load would be lower.
So does that come in mutual fund statement?
Fact sheet? If you they read the offer document, it comes there. Mutual fund का जो offer document होता है, it comes there. Yeah, see what used to happen earlier, It directly hit our business. So what used to happen earlier, there were entry loads in mutual fund. Right? So when a client comes to you, you pitch him for a mutual fund. He will buy it from you, and then when he buys a mutual fund, you get some part of that entry load. So there were commissions for selling those mutual funds. So then SEBI came in and it said that there shouldn't be any entry load anymore for investors, which means all those people who were dealers or distributors of mutual funds, their business was affected severely. And overnight, these people had to shut down because suddenly some business which was so profitable at one stage, you were earning, let's say, even 0.5% of value that you sell, that became almost zero. And the whole idea with this, with SEBI, which was the right initiative, they didn't want. See, if there are entry loads, then you're kind of not encouraging that investor to invest. But if you keep an entry load, you're encouraging him to remain invested. If you keep an exit load, you're encouraging him to remain invested. Because if you sell, we'll charge you commission. So आते वक्त मत लो, जाते वक्त उसको charge करो. How much should mutual fund earn to provide a return of 16%? So initial expense 5.5%, annual recurring expenses of 1.5%. Simple math. 23%. So 23 में से क्या कैलकुलेशन किया आपने? 5.5 6 7. हाँ, वैसे कैलकुलेशन नहीं चलेगा इसमें.
सर पीरियड भी नहीं दिया इसीलिए वो समझ में नहीं आ रहा.
So it doesn't matter in this case, it's irrelevant period. See, I'll give you some pointers to think on. If I invest 100 rupees in equity, by the end of the year it becomes 116. If I invest in 100 rupees in mutual fund, immediately it becomes 94.5. Right? So had there been no 1.5 element there, then it should have become 94.5 should have become 116. But then at the end of the year they will also take 1.5 from me. So 94.5 should become 117.5. So 117.5 divided by 94.5 minus 1 into 100. That was the answer. So the difference was on timing. That 5.5 is taken at inception, 1.5 is taken at the end of the year. Are you clear? Not clear? See, if you have 100 rupees, this is equity investment. Okay. So if you have 100 rupees here, you invested 100. By the end of the year, you will know this will become 116. In mutual fund, if you invest 100, by the end, immediately it would be an investment of 94.5 because they will take out 5.5 from it. Following it? Initial load, entry load. Then ideally, had there been no those charges, which charges? Recurring charges. Then 94 should have become 116 and it would have been same. But you also need that extra 1.5. So how much do you need? You need 117.5. So your 94.5 should become 117.5. That means the rate of return that you earn is this minus 1 into 100. $24.33. So that's the answer.
So I didn't get this bit. 116 plus 1.5.
See. Hmm? Hmm. Huh. So मतलब आपका the other way around. So you got 117.5. They will take away 1.5 from you. So you are left with 116.
Okay, so हाथ में 116 होने चाहिए.
116 होने चाहिए. So we want to earn. We have invested 100. They should become 116. But 100 they made 94.5, and it should be 117.5. Are we good for next question now? Okay, let's do question number 2. Effective yield. A has invested in 3 mutual funds: 112 2003, 11 2004, 13 2004. 50, 1 lakh 50,000. Net asset value 10.5, 10, 10. Dividend received up to 31 3 2007. 950, 1500 nil. NAV is on 31 3 2007. 10.4, 10.1 and 9.8. What is the effective yield per annum basis in respect of each of the 3 schemes up to 31 3 2004? Calculate. आसान है. आ रहा है समझ में? नहीं आ रहा है समझ में? See, it's very simple. You had invested at 50,000. At entry date, NAV was 10.5. So you can calculate number of units on entry. 4,700. Then at the end of the day, that NAV is 10.40. So you can calculate total value of asset at the end. It would be slightly less than 50. So you would calculate amount of loss there. And then you have a dividend benefit. So benefit of dividend minus amount of loss, you will have a net benefit or either a net loss. There is a net benefit of how much? 473. 473 is what you've earned on your investment of 50,000 rupees. So that's how much? 0.09%. Now 0.09% is what you've earned over what period? From 1/12/2003 to 31/3/2007. So ये जितने भी महीने का होगा उसको उससे divide करो and multiply with 12 and you will get annualized yield. So of course what you're getting is very small yield now.
It's given up to 31st March 2004. So what is it? Or what is relevant? Last line.
Start. So निकालो. Actually एक मिनट रुको, ये सही था, ये गलत था. This should be 4.
Dividend cost due.
Now it would make more sense to the question. क्या होता है ना, at times. Okay, once the recording is over, I'll tell you the story behind this. हाँ, this is correct now. The question is correct. 31 3. अभी करो. निकालो for all the three. Or do you want me to solve this for you?
प्रेजेंट कैसे करना है?
हाँ?
निकालेंगे.
क्या?
प्रेजेंट कैसे करना है उसको?
हाँ, करो फिर, चलो. Particulars. This is fund A, B, C. So this is A, this is B, this is C. Number 1, say period of investment. So हर एक का period of investment निकालता है. Period of investment कैसे आएगा? 1/12/2003 से लेके 31/3/2004. कितना हुआ ये? This is 4 months. So this period is 4 months. ठीक है. उसके बाद में 1/1/2004 से 31/3. So this is a period of 3 months. Then 1/3/2004. This is a period of 1 month. Okay. Once we've done that, then we will say amount of investment. We'll just reproduce what is given there. Amount of reinvestment, amount of investment 50,000, 1,50,000. Okay. Net asset value at entry date. So now on entry date 10.5 10.5 10 10. Okay, so number of units purchased. Number of units purchased would be total value divided by NAV. So we have number of units for all the three questions. Once we have number of units purchased, then we will say NAV as at 31/3/2004. So 31/3/2004 NAV is again given in the question. 10.4, 10.1, 9.8. 10.4, 10.10, 9.8. So closing value of MF units. Closing value of investment. Number of units into closing NAV. So capital gain oblique loss. Closing value minus opening value. Dividend received. 950 1500 नील. Holding period return. Yes. Please ask if it's not clear. Do you write down the formulas when you make those margins, or do you also write it in the same fashion? No, I mean, do you know that I assume that you would write down that how holding period is calculated? So I assume that you people will write down formulas in these margins, and it is assumed in the exam. So in the exam, this wouldn't work. So for everything that you've calculated, you will have to give an explanation. For in this case, it would be HPY into 12 divided by period of investment. Here, holding period return, this is nothing but net gain divided by value of investment. Can I make this assumption that you would write these formulas everywhere? Okay. Yes, please ask question if it's not clear. Should I repeat any part? Yes, Anuja. काय नाही समजत आहे? कसाला? So let's start from the beginning again. We have हमारे पास amount of investment है, NAV at entry date है. How did we calculate number of units? We said amount divided by NAV. Okay, so that gave us number of units, that how many units we had invested into each of the scheme. Then we have a closing NAV also. and therefore we calculated closing value of investment as number of units into closing NAV. Okay, so you have this value here. Now once you have this, then you will have capital gain and loss. That 50,000 invested became 49,000. So capital gain and loss in each of the section. Then we have a dividend received also. So we calculated net gain or loss here. So net gain and loss 473, 2500 and minus 1000. We calculated that as a ratio to what value I had invested originally. So originally I had invested 50,000. I have earned 473. So my net gain is 0.95%. Then I had invested 1 lakh, I have earned 2500, net gain of 2.5%, and so on and so forth. Then we simply annualized it. That 0.95% is what I have earned for a period of 4 months. So how much per annum? So 0.95 into 12 divided by 4 for remaining years. Done. Simple. Manoj, are we good to move? Next question. Okay, so 2 is done. 3 is done. Calculate question number 4. Try to do it on your own. Then I'll help you with this. How much? See, again, very simple, straightforward answer. This is your first return, which is coming from income distribution. Matlab, company invested into certain stocks, that stock gave dividend, company distributed that dividend to others, so income distribution. Then company also made some capital gain distribution. So total money that you've received is this much, 0.0375 plus 0.03 plus a 20 rupee investment has become 20.06, so you have a capital gain. Total of all the three as a ratio to 20. That's it. So कितना आएगा? So 0.06 is your first return, which is coming from capital gains. This will come from capital appreciation. Then there is an income distribution, 0.0375. 0.0375. Then there would be a capital gain distribution. This amount of distribution is 0.03. So we have a total return, and then we have a value of investment. Value of investment is 20. Therefore percentage return, to which we will call as holding period yield. Holding period yield, YIELD. Okay, do you understand holding period yield? That yield calculated for whatever period I was holding the stock. So 20 is a ratio to this amount. I did the other way around. This amount as a ratio to 20. So that's 0.63875%. And then we will calculate an annualized yield. An annualized yield would simply be this amount multiplied by 12. Hmm?
Closing
06. Are we okay with this? Should we go to next one? A mutual fund having 300 units has shown in NAV of rupees 9.45 at the beginning and at the end of the year respectively. और एक चाहिए. Let's mark. Let me find out. March 2006. Come on. This will take us 1 hour to solve. So this is not for today. Okay.